Hello, everyone. Welcome to the first SNN session. Today's session is on taxes, right? So much fun. We all have to do them. We have two of the greatest people that I've met in the last little while, Riya and Saurav from TaxZen. They'll be talking about taxes and adulting.
Of course. Thank you, Prashant. Yeah, I am Riya. This is Saurav. And we do taxes on a daily basis, actually.
Yep.
And so basically, we have a CPA firm in Atlanta, Georgia. Saurav has been doing this since 2015. I joined him in 2018. And we've been running the CPA firm up until now. And we just launched our tax platform, TaxZen, this year. And CPA firm, we do everything from helping individuals file their taxes, from businesses file their income taxes as well, sales tax, payroll tax, all sorts of taxes. And on a more of a day-to-day basis, we also do bookkeeping and business consultation for businesses. And also on a case-by-case basis, we also support individuals in whatever like letters they get from the IRS or like getting audited and all that. And so yeah, we help businesses to minimize their taxes and maximize their profit. And we talk about deduction. We talk about a lot of education around taxes as well.
Yep. Thank you. Thanks for the nice intro, Riya. So in terms of taxes, right? Every penny that you earn is going to be taxed. As Benjamin Franklin's saying go, in this world, nothing is certain except death and taxes. So understanding basics of taxes is a must as we become a responsible adult, right? And there are a few elements that determine how much tax you pay, like filing status, whether you're filing single, married, filing jointly, head of household, right, or qualifying widower or widow, and there are deductions, credits, and withholding. So let's say, for example, if you are single and you earn less than $12,000 a year, you technically don't have to file a tax return. But here's the thing, right? If you have a job and money is being withheld from your paycheck for income taxes, or if you qualify for education credits or child credit and whatnot, you may be entitled to a tax refund. So it's always a good idea to just file your taxes, even though you feel like you don't have to or you didn't earn any income, because there are different types of credits. Refundable and non-refundable. So non-refundable credits, like you cannot claim them unless you have income, but refundable are like you are entitled to it even if you don't have any income. So government runs on money that you pay them and wants a piece of everything that you make. And majority of the countries, US, Canada, and even Nepal, they have a progressive tax systems. US starts from 10% and goes all the way to 37% max based on your taxable income. Canada, Prashant, has a max federal tax rate of 33%, but this is just a federal rate, right? There are each state and even your local government may impose additional taxes, which at the end of the year, it may get out to be higher in general, how much you would pay in taxes.
Yeah, the talk of taxes can get very technical based on what your personal scenario is. And just to keep it very, very general, it's like we pay taxes so that the government can run. And so everything from public schooling to infrastructure to public transportation, all the government staff and employees run on this. So the president of the country up until your local government, everyone's salary is paid with taxpayers' money. So that's the idea around taxes, to keep governments running, to keep economies running.
Yep, and even when there's a major recession and there's big bailouts, right? It's coming out of taxpayers' money. So types of taxes. So how does the government fund all of this activity, right? So I'm pretty sure everybody has heard the big 2 trillion infrastructure bill that Biden is about to pass. So it's a mixture of not everything is funded by taxpayers' money. So on that, they align on, okay, how much percentage of that 2 trillion is going to come from taxes and how much percent of government bonds. So there are many things that that get into consideration. So types of taxes. So there are 3 basic types of taxes. Taxes on what you earn, taxes on what you buy, and taxes on things you own. So taxes on what you earn would be income tax, individual income tax, corporate income tax, payroll taxes, and capital gain taxes. So last year, due to COVID, we've seen a huge surge of people going into investing in terms of day trading, right? Buying and selling stock. What they don't realize is at the end of the year, when they file taxes, they gotta report all of that in. So that's when the capital gains tax comes in. Taxes on what you buy would be your sales tax. So you walk up to a grocery store, or even in the course of living your everyday life, right? You go buy a bottle of Coke. It's 99 cents, but with taxes, depending on where you live, it may come out to be $1.07. So what the business does is they collect that 8 cents out of your ticket, and then disperse it at the end of the month to the state or the local government. So I'm going to use Atlanta as a basic scenario. That 8 cents that you pay, 4 cents of that goes to the state, 3 cents goes to the county, and 1 cent goes to the city, right? And there's another gross receipts tax. There's value added tax, VAT. And there's excise taxes that you'd pay on liquor or you'd pay on your car. And taxes on things you own would be property tax. So if you own a home, you do pay property tax on those, or even land. There's tangible personal property taxes, and state and inheritance tax. So even when you die, the government wants to make sure that they get a piece of what you left or what you've earned throughout your entire life. And wealth taxes. So those are the basic types of taxes. And I think when it comes to filing, we're going to keep it very general here on just the types of form. And since we are in SNN, primarily it's going to be either you would file a 1040-NR, which is non-resident income tax return, or 1040, which is a resident income tax return. So Riya, do you want to talk a little bit about how the 1040-NR works?
Yeah, so a lot of people are confused on, like, who needs to file non-resident income taxes and who needs to file resident. And this is very general to, like, every country you go. If I go to a different country, I'm going to be a non-resident, right? So basically, non-resident or resident income taxes is not dependent on your immigration status. So for tax purposes, it's a completely different thing. So people think, like, I'm going to file non-resident because I'm not a citizen yet. That's not generally how that goes. For tax purposes, just like, the IRS of different country might have different rules, but for US, like, in order to be a resident, there is, like, certain steps to follow. And there is this one called substantial presence test. So you need to have been in the US for a substantial period of time, and then you're considered a resident. And it's generally like 3 years for over like 200 and some days, consecutive days, and then you are going to be considered a resident, right?
Yep.
But on the other hand, if you are a student, then it is going to be raised up to 5 years.
5 years. Yep. And we get a lot of international students come to us in terms of filing their taxes as well. And you have to report your number of days present by years. So keep track of those. There are certain schedules that you need to file, Schedule IO and 8453. And one of the more common mistakes that non-residents make is filing their taxes as a resident. If a non-resident files as a resident, then they can claim benefits and receive refunds that they're not entitled to.
And deductions also
deductions,
goes up. Yeah.
Yep, correct. And then it can lead to complications when applying for future US visa or for a green card, and there may be even fines and penalties imposed. So it's good to assess which category you fall under. So there are certain forms. If you are not considered resident for tax purposes, you can just file form 1040 NR easy. And what it would do is it's basic criteria that you need to meet. And if you just have income, just go ahead and file it. If you don't take any itemized deductions. But it's good to note that for filing form 1040 is for residents only. And which, as Riya mentioned, it comes depending on what visa you're in. So let's say J researchers and professors are considered resident aliens after 2 years, but people in F and J student visa are considered resident after 5 calendar years in the US. And H1, TN, and O1 visa holders can be considered resident aliens once they meet the substantial presence test. Okay. And
I think another major confusion comes from who is going to be in a payroll and who is going to be a contractor, right? So especially last year was tough for a lot of people, and because of the pandemic, a lot of people were laid off, and since countries around the world were laying off employees because they couldn't afford to keep them. A lot of people went into starting their own businesses or even doing contracting work. So that too is going to be taxed in a different manner. So if you are an employee of a company, then when they are for instance, you make $5,000 per month, but you're not getting all of that in your pocket every month. So a certain part of it is always going to be withheld from your paycheck. So maybe you get 4,200 every month, and the remaining 800 goes into your social security taxes, your Medicare taxes, your unemployment taxes, which is paid by the employer, your withholding taxes for your state as well as your federal side, right? And all of that comes into play when you are filing your taxes at year end. And with W-2, who receives a payroll pay stub, the W-2 is someone who is an employee. And in order to make a difference between who's an employee versus a contractor, it's if you have dedicated hours that you need to go to, so you need to come into the office 9 to 5 and work under our policies and our plans, and follow our employee handbook. You can do this, you can't do that. Those restrictions are put in place for an employee. And versus a contractor, it's get this job done. It's your task to get it done. I'm hiring you as a contractor, but you work in your own ways. So a big difference can be if I'm working as a barista at a Starbucks and I'm following their shift hours, they tell me you need to be here from this hour to that hour. I'm following Starbucks policies. I'm wearing Starbucks uniform, right? And I'm basically working for Starbucks at that time. And I might be eligible for the benefits that they provide for me. I know they do education benefits, they do health benefits, all of that. I'll be eligible for that. And on the other hand, I said, with the contracting work, a lot of people went into doing Uber and Lyft drivers and Grubhub delivery, all of that. So in that case, it's if I'm sitting here, I'm I don't have anything to do, I'm going to log into Uber and just drive around. It's I'm in charge of my own hours and how I do my work. It's my car I'm using. And so in that case, it's a contractor work. And at the year end, I'm going to get a 1099. Which is going to be a lump sum of everything that I made. and there's no taxes being withheld on that end. So on W-2, if you're an employee, then they withhold some taxes. When you're working as a contractor, 1099, nothing is being withheld. So at year end, you'll have to basically take a piece of it and like pay taxes on that.
Yep. And one thing to note is even when you do consulting work, right? So for example, if we consult for a big corporation, they're going to issue us a 1099. And if you're transitioning from, let's say, a typical W-2 where you are an employee of a big corporation and doing some consulting work on the side, and the companies are required to issue you a 1099 as soon as you earn more than 400 or 500. Yeah, but once you get issued, let's say you got 20,000 a month from your consulting gig, taxes are not being withheld from there, right? So what you can do is you can, there's a schedule called Schedule C that we'll have to file, and it's a very good practice to keep that money and the expenses relating to consulting work on a separate bank account. Typically, you would want to file an LLC and then get a bank account dedicated for your business, even though it gets reported on your personal side, right? Because you are entitled to deductions. So you can deduct your car mileage. You can deduct the square footage of your home that you dedicate for home office. You can also deduct any type of expenses related to business. You can deduct travel, you can deduct 50% of meals. So there's so many benefits when it comes to 1099 that people like simply do not know, or they just file it and they end up paying a lot of taxes. So if you have a couple of those folks in your circle, or you know of them, or you are one, I would recommend going back and amending your tax return. So you can amend back to 2-3 years. So definitely look into that, and something that you can start keeping track of, right? Keep track of your miles, start logging them. And it doesn't have to be anything complex. A simple piece of paper where you just write down the dates, point A to point B, X miles, done, right? And also, do you want to talk about filing statuses as well?
Yeah, for sure. And like, you know, filing statuses, we have like single, we have married filing jointly, we have married filing separately, we have head of household, we have qualifying widow or widower, right? There are a lot of different like filing statuses to pick from. And if you are single, you don't have like, you know, any dependents or anything, you just file single. That's it. Like your income gets reported, your deductions get reported, you get your credits. That's as simple as that. Married filing jointly, it's like if you and your spouse want to file together, it's going to be married filing jointly, and all the deductions and credits are going to be lumped into both of the people in one tax return. The next thing would be married filing separately. It's like you're legally married, but you would like to keep your deductions and credits separate. So that's another option. So you would file your own taxes on one hand, and like your spouse would file another one. And head of household is generally used by people like, you know, if I have dependents, but I don't have a spouse to marry file jointly with, then I would do head of household. And qualifying widow or widower is like if in case there is like, you know, someone ends up being a widow or widower, they do get the deductions or credits as a married filing jointly up until 3 years of the death of their spouse.
Yep, and your pet does not count as a dependent. I'm sorry.
Unfortunately, because that would be great. Yeah.
Yep, and then also getting married. Like if you're planning on getting married, as long as you get married until December 31st, you would be considered married for the entire year.
Right. If anyone is planning on getting married like on a January or Feb, I would say like push it forward, make it December 31st, so you get all the credits and deductions.
Yep, and also same thing applies for having a kid as well. As long as your kid, I mean, you don't control it, but still, right? Gets delivered by
December 31st.
December 31st, you can claim him or her on your tax return. Also, it's going to be an unfortunate event, but if somebody dies or if your spouse dies, you can qualify as a widow or widower. You can do married filing jointly for that year, then do a qualifying widow or widower for the following year, and then you can get into head of household, depending on your tax scenario. Okay, so I think we can open it up for questions, Brishank, on Clubhouse as well and on Zoom.
Yep. So if anyone has questions, just go ahead and ask them. I'll on Clubhouse, just let me know, raise your hand, and I can let you ask the questions. If there's no questions, you guys can just, if there's any frequently asked questions about taxes and such, you guys can just, state it and then answer it yourselves. Because I think that'd be wrong, because a lot of people might not have questions now, but later when they're filing in, their taxes, they might have questions. So yeah, the floor will be open now.
I have a question.
Hey, yes. Go ahead.
So I know that undergrad students get like 1,000 from school, but like what other ways can we get money or like basically add it to our tax? Like let's say like buying books, maybe laptops, anything regarding school that can be helpful.
Yes. So what the school is going to issue you a 1098-T. So you basically include that while filing your tax return. And when you do that, you can include the amount of books. So there's going to be some threshold of how much you're going to get, but depending on what category you fit, right? You can either get American Opportunity Credit, which is a refundable credit, which means even though you don't have any income, you're still going to get the credit. Second one is going to be Lifetime Learning Opportunity Credit. And the third is just education credit in general, where you can get certain credits for doing training, educations, right, relating to your work. And then you can just claim them on tax returns.
Yeah, the 1098-T will have details of like, how much you paid the school in that year and how much like scholarships or grants that you received. And also there is going to be like a section where you talk to your tax professional and let them know like, okay, here, like I spent this much on books that like, I definitely needed for the class and like, other qualified expenses, I would say.
Mm-hmm.
All right. I gotta have a question here. So thanks for engaging with the conversation. Really, a lot of insightful topics you kind of touched based on. So my question was like, I know like as a fresh grad, a lot of people end up paying like loans that they had kind of got when they were in school, and then like when you pay the interest, I know there's some portion of where you could put it on your tax return. Can you talk a little bit about that?
Yes, so there's a student loan interest deduction that's available. And that is also dependent on your personal scenario of how much you can get. And there's some phase out on that as well, but you can definitely claim those.
Yeah, and at the year end, like other tax forms you receive, you will receive a 1098-E. And that will have details regarding around like how much interest that you paid, how much loan that you paid in that year. And depending on that, we would basically evaluate and calculate how much of that is going to be deductible.
All right, sounds good. Thank you.
All right. And I think BJ's is pulled up. Did you have a question, BJ's?
Yeah, I did have a question. So my question is like, I put some money on Roth IRA like last year, around mid or like late last year, but then I haven't received any document about that. So my question is, am I supposed to report that while I'm filing taxes this year, or am I not supposed to report that?
So you are supposed to. It also depends on, so taxes is very personal, right? Tax is very personal. So it depends on your employer if they provide you with an opportunity for 401k or not. If they do, then nothing happens. If they do not, and you put that money into a Roth, and depending on your other circumstances, you can get a IRS deduction for that.
So like, let's say I like, this is not for from the company. I like opened a separate Roth IRA, and I haven't received any tax documentation. So like, my question is like, I'm just wondering if I'm supposed to receive any document for taxes or not.
For just making the contribution, you would not. But if does your employer provide you with an option for 401k?
Yeah, they do.
Okay, then you wouldn't be able to claim the deduction. So if they did not, and you put that money in by April 15th, so this is another thing, right? I think this would be applicable for everyone as well. So if you do not have a employer sponsored 401k, and you put some money into a traditional IRA, or even Roth as well, you can get a deduction as long as that money is put in by April 15th. So you can claim that. So for example, for 2020, you can actually put some money into an IRA right now and claim that on your 2020 return.
Got it. Thank you. Thank you for advice.
Mm-hmm.
So is it that you pay taxes when you kind of put money in Roth IRA too? I thought it was more like when you take out the money from Roth IRA.
Yes, correct. This is regarding deduction. So there's a so you get certain portion of what you call it. It's a credit. So it's not you pay taxes when you put in the money, but if you put the money into a traditional IRA, you're basically reducing your taxable income, not paying tax on it, but reducing it.
Okay, that makes sense. Thanks.
Okay. Yep. All right. Any other questions?
I guess with a lot of people like investing on Robinhood and things like that, like I know for us, like in Canada, we have a similar app called Wealthsimple. So the process is probably similar, but how do you file those like extra income, I guess?
Yeah, with that, there is going to be gains as well as losses, right? When we are doing all the trading there, for US, I know for Robinhood specifically, if we talk about it, they send like one consolidated statement with the interest statement, with dividend statement, with all the gains and losses regarding your stock trades as well. And that statement is going to have all the details like, your professional would need to see how much interest was earned in that year, how much dividends was earned, how much you made in gains or how much you lost that year in trading. And depending on that, all of that is going to either like, if you made a lot of money, that's going to raise your taxable income. And if you lost a lot of money, it's going to reduce your taxable income. And this also applies to actually Bitcoins because like, people are trading a lot of virtual currency. And IRS has actually started, like, I think in 2019, we had to start like, reporting, like there's a whole section that says, did you trade virtual currency? They're being very specific about it. And for instance, like, if you're just trading in Robinhood, any other sorts of trades, it is generally only like, aggregated numbers. So like in this entire year, when I traded in Robinhood, I made this much. But when it comes to crypto, it's being very like, very detailed in the sense of like, you have to report like every single transaction.
Yep.
Yeah.
Yep, and there are plenty of tools out there, and actually we do provide the crypto solution via TaxZen as well. So you can connect your wallets, and then all of your gains and losses are calculated automatically. The way IRS treats crypto, and I think crypto we can do a whole section of its own, right. But it's like anything that you mine or that you receive. So there are certain things, and when we started this conversation, right, we started talking about how the government is gonna want a piece of it with anything that you do. So anything that you own as well, and for example, if you own Bitcoins or you've invested in any other coins, as long as you don't sell it, you're fine. But if you get some Bitcoins as part of your mining effort, right, that's considered income. And then that has to be reported separately. And also, if you get crypto as part of airdrops, right, that would be considered towards gift. And the regular investing piece is there. And I think Robinhood enabled crypto trading as well last year. So there's a higher chance that it is being reported separately. So just want to be careful on that. And regarding regular investing, you have 1099 int, right? Like we have mentioned, 1099 dev. 1099 int would be for interest, 1099 dev would be for dividends, and there are other 1099s where you get to I don't want to get into details, but there's like short-term and long-term gains, right?
That's
Depending
1099B.
and 1099B, yes. And with 1099B, you can get into like, for example, if you buy and sell within a year, that's short-term, so it's going to get taxed at your marginal tax rate, which means the amount of income that you earn and the deduction that you have, and with your taxable income, that determines your marginal tax rate. And what you would also do is if you receive a 1099B with a long term where you held the stock for more than a year, then you would pay capital gains taxes. And capital gains taxes can go from 0 to 15%.
Looks like they're really detailed around that. So probably it probably makes sense to have a session just in this regards to better visualize with like presentation and things like that.
Yes, exactly. Yeah. Exactly. On when it comes to investing, when it comes to crypto, when it comes to business. So there's a new section. I think it's on the 17th, right, Bishal? Yeah. So a follow-up session would be it's labeled as business, but I would say you can count investing as business as well, right? So and there are certain things that you can deduct.
And sort of.
Even when like you have you're investing. Like for example, a lot of our clients they trade on margin. So the interest that you pay when you trade on margin can be deducted from your gains. So there's too many complexity that you can get into. So investing in business definitely demands a session of its own.
I definitely look forward to that session then.
All right.
Hi, Saurav.
Hey, yes.
I have a question regarding 1098 for graduate students. I've come to hear that graduate students are not required to report 1098 even though schools issue that. Is that true? Because what I'm facing is that because I'm a PhD student and I get a lot of fellowship which covers my expenses, and well, I've always used TurboTax, and while using TurboTax, I have to report everything, all the figures that's available in 1098T, and because 1098T includes all my fellowships, which can amount up to $50K per year, and so right now I'm facing this situation where I have to pay $2,000 to $3,000 in taxes instead of getting any kind of return, because I've also worked as a TA. So I'm in this situation, and I heard from a friend who met a professional who told him that 1098T is something that's not even required to put in the filing. People are just doing that. There's some kind of misconception, is what he heard from that tax advisor. So I was wondering if you have any insight into this.
Yeah, sure. Would be happy to answer that, because there's definitely a lot of fake news when it comes to taxes, like especially when you get onto platforms like TikTok, right? People are just trying to get influencers or trying to be an influencer, right? Or it's, I would say 1098T, it has to be reported because, and any forms that you get, typically it should say on the envelope itself, it should say important tax documents. So any type of 1098s, 1099s, W2s that you get should be reported. And IRS tax, any type of scholarship, I'm not sure about fellowship. I'll look into that and get back with you on that, but any type of scholarship that you get is taxable income. So definitely don't skip reporting 1098T because that is going to trigger an audit. So, and you just don't want to get into the mess. And especially with the pandemic, IRS has been like really slow in processing or even receiving any calls. So even so, we have our practitioner priority lines that gets blocked as well and just get dropped off. So I would say go ahead and report those so that you don't get into any type of issues down the road. And with graduate student, 1098T would not be important in terms of American Opportunity Credit. So there are different credits that that one gets. And if you're a graduate student, American Opportunity Credit is not applicable. So he may be talking in terms of that, but it doesn't mean that it should not be reported. Does that answer your question?
Yeah, thank you very much.
Yep. Yeah, and this applies to every tax form that you get, right? As long as it's a tax form and it says reported, even if it says not reported to the IRS, I would say include that. But definitely consult a professional if you have any questions. And it's just like going to a doctor's office, right? It's like if you have a major thing going on with your health, you do want a second opinion. If they say, oh, it doesn't need to be reported, it's best to cross-check and just within your network as well, right? If you have someone who does taxes, just be like, hey, this is what I heard. Should I do it or not?
Yeah, definitely makes sense.
Yeah, and with us too, we do post a lot of content in terms of blogs, in terms of Insta posts, in terms of Facebook posts. I don't think we're as active on Facebook side, but LinkedIn. So I would say go at us and follow us on Insta and LinkedIn so that you can get the content in type of news. I would say subscribe to our newsletter as well.
Yeah, on our newsletter, we keep sending on a like weekly basis,
Yes.
Anything relating to taxes, what you need to be looking out for, and especially towards like, year end and beginning of the year, it's going to be very much focused on like, what all documents you need to get ready before tax season starts.
Yep.
And for taxes, like, what all I need to get ready for like at the beginning of the tax year for my tax professional, or even if I'm doing it online. And like like Saurav said, like internet is a great resource, right?
Yeah.
Like you can find anything from like, I don't know, the celebrity's height up until like, why am I getting a headache, right? But it's coming back to the same example like Saurav said earlier, it was like you can look online to see what health issues you're having, but WebMD is always going to be like, oh, you're dying in 2 seconds. Like, I don't know how you're alive so far. So that's what happens with internet resources and like social media, especially when it comes to taxes. There's a lot of misconceptions and like, everything that there's like TikTok on taxes. We're just looking through it and we're like, that's so wrong. That does not even apply. And it's like, it's taken out of context that many times. And so, look for credible sources when you're looking at these these news. IRS website is a good spot, but like, it's not in a language that's understandable by everyone.
Yes.
It's very technical. So whenever we write our blogs and whenever we post our newsletters, we try to make it very everyone can understand it. And it's always like researched before we put it out there, and things change. Like right now, even as the tax season is going on, there's a huge change. And a lot of people received unemployment last year, and unemployment is also taxed generally, right? But because of this new bill that Biden passed, unemployment is not taxed up until like $10,200.
Yep.
And so that was a change that they just dropped in the middle of tax season, and with people have already filed their taxes as well, right? So there are changes that come around at all times. You just need to be on the lookout for credible sources to get all this information and learn about how it applies to your tax scenario. And for some people it might make sense. For some people it's like, I have no idea what's going on, let me consult a tax professional. However you roll, but to make sure that you're reporting everything right.
Yep. And also in terms of, I wanted to get back to Washington, but I forgot what it was. Sorry about that. And in general as well, any type of form, I would say go ahead and report it. Go ahead and include it, because more than likely it's going to trigger an audit down the road, and you just don't want to get in a situation. It is very important. You will get some forms. Oh, this is what I wanted to get back to. To Brishang's point of Robinhood and investing. So you will get a form, a 1098B, where it says short-term or long-term and basis not reported to IRS. That doesn't mean that you shouldn't be including that on your tax return. You should be, because regardless of what you do, there may be down the road, like with crypto in 2018, IRS started requiring all the major crypto marketplaces to start reporting basis, right? There may be a law change down the road, and if you get caught, you are going to get caught in a big mess. So, and I didn't mean to scare anyone there. It's just like it's a word of caution.
Right.
Yeah. Thanks for that. Yeah. I actually have another question. I'm not sure who was speaking earlier before you, sir, but she said something about the relief income is also taxable. But she also said something along the line of you are not required to report it unless it is above certain threshold, I think, above certain amount. Is that true?
I'm sorry, you said
the relief income, the stimulus, I guess you're referring to stimulus, right?
Oh yeah, she was referring to unemployment income. And with stimulus as well, like if you are eligible and you didn't get your stimulus phase 1 or phase 2 last year, then you can definitely claim that on the tax return that you're filing for 2020 right now.
Got it. Thanks.
Yep. Okay. And Brishank also has is recording this Zoom call as well, so which he's going to make available afterwards on SNN, right, Brishank?
Yep. So I've been recording the Zoom call. I'll be uploading on YouTube, so people can watch it later again if they have any questions. They can reach out to you for sure. I think we'll be posting all your social medias too. So just send that my way, and I can post that everywhere.
okay, that sounds wonderful.
Yeah, and if anyone has any other questions, they can go ahead and ask. If not, you guys, if you guys don't get questions asked often, you can answer that. If not, you guys can wrap up. Thank you so much for spending your Saturday morning with us explaining taxes.
Yeah, thank you for taxes is something that people have to pay, but they don't they don't take it very seriously. And I would say definitely learn more about those, because that's where you're going to save a lot of money, honestly, and pay taxes on time to avoid penalties and interest. We have a client, we're currently in resolution with the IRS, where he reported 17 instead of 1,700, he claimed 34,000 as mileage deduction, but this is 2016. So IRS came back now, he's ended up paying 93,000. So that's just an example. So
with the IRS, it's like they find, if they find an error in one tax return, then they might start digging up other years as well. So that's the work that he got into. And there is at certain points, there is minor errors that happen, and at other times, like Saurav mentioned, there is going to be bigger 1,700 versus 34,000. It's a huge error, right? And so yeah, the IRS is never going to leave you alone in such cases. So yeah, you just have to be careful about what you're doing, and if it's a simple return, right? If you have one W-2, you're a student, blah blah blah. It's people generally tend to go towards the do-it-yourself approach. But as soon as it starts getting a little complicated, it's always recommended that you consult a tax professional, because they're only till certain point you can do it yourself. Other than that, it has to be please do it for me.
Yeah.
And it's general rule for everything in life, right? We were talking about adulting. It's if I have a headache, I'm gonna pop an ibuprofen, but if it does not go away for a certain time, I do need to go to the doctor.
Yep, exactly.
I do have a quick question. Is there a way we can do a self-audit, or have a professional do a self-audit for us?
They just a quick review of your tax return?
Yeah, if we made any mistakes on our previous returns.
Yeah, you could definitely do that on your previous returns. Yeah. You can definitely do that. Typically with just review, people are not it would be good to wait until the tax time is over for that, unless you receive a letter from the IRS, right? Because right now everybody's slammed, and it's not going to get prioritized. So it would be good to wait until after for this year, it's May 17th, right? Wait until May 17th, and then after that, it'd be good to just look at it and see what all you have received and have been reported. And it could also mean that what we found a couple of scenario where we were able to go back and get more money back. So that's one of the things that we do in our firm is if a new client signs up, we ask for last 2 to 3 years of tax return, and then go in and quickly do a review, because from just a professional conduct as well, right? We are required to review and report any issues with the tax return.
All right, thank you.
All right. Any other questions? I see Rajiv and Bimala joined as well. Susan, if you guys have any question, feel free to jump in. I think he left. All right, cool. Prashant, anything that you guys want to cover?
If there's no other questions, you guys can just wrap up, and then thank you again for having this wonderful session. I think everyone gained lots of knowledge from you guys. Yeah, you guys can wrap up.
Okay, great. Thank you, Prashant, for hosting this, and SNN. And this is what we do every day, and this is what we're passionate about, and we would not be doing this if we didn't love it, actually. And Brijesh was talking about auditing, personal auditing, that's what we do. We go back to our previous year returns. We like to look for errors, right? That's something that we're passionate about. And so if you have any other questions as you're doing your taxes, or if you do need professional help, please feel free to reach out to us. Also follow us on social media, and also check out TaxZen.com. So this is we are a small business, we are a startup, and we have been putting everything that we have, our sweat and our blood into this, and we were able to launch this year. So support your local startups, support your Nepali startups. Give us a lot of love, please. And in return, if you need any sort of help, do reach out to us, and we'll be here for you.
Yeah, the TaxZen side is a startup, but on the CPA firm side, we've been in business for more than 5 years. So that does not mean that you're just going to get a rookie. and also feel free to just ask questions. Shoot us a DM, right? We have I may not be able to get to it, Riya may not be able to get to it, but we have other team members who are constantly looking at our inside DMs and answering any questions that people may have. And check out TaxZen.com, and give us feedback if you feel if you feel like there's something that's going to add value to you in terms of doing your taxes, right? Definitely let us know as well. And another thing is, a lot of people right now are thinking about starting a business, right? Mm-hmm. So I would say, just if you guys want to just instead of just going out there and doing things yourself, which is the which may seem like easiest way to do, but as you start making money, it's going to be a big pain in the butt. So it's always better to consult a professional, be it us or not be us, right? Depending on what type of business entity that you want to go with. There are so many things that you can choose from, but you'll be like, all right, what the hell am I supposed to choose, right? So things like that, definitely engage a professional, and so that you are set. We are right now doing a conversion of an LLC to a C Corp for one of the clients, and that's just a nightmare, right? And it's better to start in the right way. Prevention is better than cure. If we have to get involved and cure it afterwards, then it's just going to be too expensive. Yep.
All right, perfect. Thank you guys so much. We look forward to the small business / investing one on April 17th. You guys will be back for that.
Yep.
Sounds good. Thank you for spending your Saturday morning with us, for going over everything. We appreciate it so much. Like I mentioned before, we will upload it on YouTube, on SNN Facebook group too. So people that weren't here, that wanted to be here, they can watch it afterwards, and they'll probably reach out to you if they have any questions. And then that wraps up today's session. Thank you all for joining.
Right. Thank you guys.
Thank you guys. You guys are our tax doctors now, so be there.
Yeah,
we should use that now, tax doctors. Yes.
Tax doctors. Yep. There you go.
And then the next session for the SNN is yoga with Suruchi, which I think she's listening right now. So look forward to yoga with Suruchi next week.
All right.
Thanks, Prashant. Look forward to it. Thanks, guys.
It'll be fun.
Have a good one.
All right. Thanks.
Perfect. Bye.
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 Thanks.